Right. Thanks very much, Alex. So I can see the timing. We have 44 minutes, really moving very fast. But so for today, what I wanted to say, like an introduction, maybe to build on what Panayotis said before, payments orchestration, the homework is, great. The homework is a deep one. There's a lot to say about it. But the way I understood payments orchestration, me being a lawyer and advisor, so not being actually in the business side, was that it actually means to bring every player in the chain of payments together on one platform and working on that. And basically enhancing and easing the process of making a payment. Now, starting with that, what I heard in the previous panel was regulation, was basically responsibility and a long time to get licensed. Coming from that and moving more towards a practical perspective, what I want to achieve today together with the panelists would be to be more practical and to look behind the scenes, because we heard in the first keynote speaker, he was saying payments are going to be invisible. So from my perspective, it's invisible for us when you make a payment. The demo looked really, really nice. You just make a payment, you pay, and that's it, payment accepted. But there's a lot to be done behind the scenes when that payment is actually accepted, and there are a lot of players in the chain. And actually, I think that fragmentation comes into play when we talk about payment orchestration, so what happens behind the scenes. With that having said, I think I just did a short research, and it seems that global payment orchestration market size is valued at 607 million in 2022, and it's actually expected to go to 1,198 million by 2028. So I think that just shows the business opportunity behind the whole mechanism. Having said that, I'm just going to dive into the first question, and I'm going to address it to all the panelists for you to decide which one takes first. The question would be, from a technological standpoint, what are the innovation or trends that you see shaping the future of the payments and the payments orchestration system as well?
Thank you. So I'm a founder and the CEO of a company called Coriander. We are a payment gateway provider and orchestration for merchants. We do see a lot of changes and a lot of additional payment methods coming into the market and the difficulties of implementing them. The whole point of an orchestration platform to assist merchants in simplifying and unifying the format that they send a request to the payment systems in order to get the unified response coming back. With the addition of 3D 2.0, the changes in the tech side are adding a lot of friction in terms of the integration itself. Now, working with an orchestration platform gives the merchant single format to send a request to, getting the right payment method to load based on IP addresses, the amount of the transaction, do we require KYC on the customer itself, and additional, it's a redirection that needs to take place during the transaction format. We do see I think on average, we add about 5 to 6 new providers and payment methods every month, and we see the changes in terms of implementation. And I think it's crucial for merchants to use an orchestration layer to save the friction and allow them to add as many payment methods to make their payment process for their customer as quickly as possible on that part.
Yeah, well, thinking about what's behind the scenes, well, we have a merchant, which is, I don't know, the owner of the entire business. So he's asking us for help, for a specific help, for a documented help. So what is important for us to know is that at the base of every partnership that might come up while signing a partnership with between a bank and a merchant, the fact is that it's so important for them to feel comfortable, to have access to all the information, to be transparent, and at the same time to offer him innovation and technology as it best. So I guess that could be an answer. But maybe from your point of view?
Well, we are a technology vendor, so I very much like talking about initiatives of change in the future and how things will be simpler, easier, faster, etc. Sometimes the initiatives and the regulations are a little bit of a wishful thinking. I mean, we have to think a little bit, where is the market today? Today, the payment acceptance for merchants is completely segmented. Every channel is a separate channel. Sometimes the same merchant will process his physical card-present transactions with Alpha Bank and his not-present transactions with somebody else, etc., etc. We all want to change that, okay? But what is needed to change that? I mean, we have technology solutions for omni-channel acceptance, fully integrated, and every time we try to implement it with our customers, the problem is never the technology. The technology is there. We can do it. We have the machines, we have the software and everything. Why we don't do it? Because the acceptance market is fragmented, even on the KYC level, on the merchant recruitment level, etc., etc. And the second thing is, who has the benefit if we do it? Let's say, who is benefiting from a completely orchestrated payment acceptance? The merchant. But to achieve that, somebody else has to pay. So we, the market participants, have to invest money, work, pay, so we orchestrate the payments so that the merchant has a better life, but the merchant is not willing to pay for that, okay? So this is one concern we have to keep in mind. To come to your question about technology, there have been developments on the technology level over the last years that facilitate this orchestration in a very big way. For me, the biggest technological change towards this direction was the introduction of Android operating system on the payment devices. And I'm very proud because we have been the first company to bring Android POS to the market. When I was speaking in conferences in 2016, announcing Android POS, people thought I was crazy. Today, it's the standard. Because the best way to get systems to talk to each other is to have some kind of unified operating or standard operating system. So we have Android payment devices out there, either standalone or integrated into the cash registers, etc., etc. So that has been the biggest technological breakthrough. But looking again at the market, technology is also the biggest blocking agent. Let me give you an example. Major retailer in my region, super big, hundreds of stores, multi-lane. His network infrastructure at the shops is so bad that although he is installing LAN Android terminals everywhere, he is selecting terminals that have a 4G SIM card in them to act as backup for when his network is down, which is quite frequently. So no matter what we come and propose, fully orchestrated, fully integrated, etc., when you have this kind of technological bottlenecks on the side of the merchant, who is the one to benefit the most from orchestration, then you have to start being a little bit more modest on the expected pace at which we will go towards payment orchestration.
Well, from our side, I will go a little bit more practical, in fact, to the very, very core, our users, our clients. We turned to them and we saw what, in fact, they want. They wanted to manage their money the way they can, the way they want, and when they want. So we at SelfPay made the decision that we are going to go hand in hand of physical and digital, so that to democratize the using of the money and payments. So that's why we have developed almost already 10,500 payment terminals and growing. And in the same time, we created a mobile application where you can digitalize your cash, where you can put cash on any of these terminals, so that to be used in online payments. Because the important part is to know that there are people that are digitally native, yes, but there are also others that are, let's say, less so accessible to the digital services. So what we believe is that the payment orchestration should turn to the end user and to allow him to orchestrate his own money, because we offer different services, we offer different channels, but at the end of the day, it's the end user that is deciding what he wants to do. And what we were looking for is to have the biggest accessibility possible in both in the physical presence and in mobile application. And we see also that not only in Romania, it's something that is interesting, but also in other countries. That's why we moved forward also developing platform as a service to give the opportunity to other players also outside Romania to give this service and this opportunity to the people to manage their money and payments in the way they want.
I don't know if Mads is still online, or?
Yes, he's online.
I am indeed, if you guys can hear me.
Hi, Mads. Yes.
Hi, everyone.
Just wondering if you wanted to chip in on the question.
Yeah, I would love to. And love to see myself on the big screen here. Thank you for the invite. I'm here in Copenhagen. Would have loved to be there, but I couldn't for family reasons. So I'm the co-founder and CEO of Settlement. And essentially, we make it simple to do event-based payouts. We figured out how to do that with real money, fiat money, through smart contracts, and have worked a lot with our Danish regulator in order to make that happen. I love, the idea that we talked about here, talking about payments as being invisible. We really believe in that. And what are the two technological drivers to make that happen? One, AI, of course, and that is running full speed. And two, programmability, which is really where payments orchestration and what we're doing here comes into the picture. And on that programmability side, the ability to basically, for the end user, being able to say when certain conditions are true, then the funds should be released. And it should already be possible to authenticate that ahead of time, so to speak. And this is really what we're going in and giving the user an opportunity to do as part of the payments orchestration. On the AI side, then we really see AIs as there's all kinds of controls that you can use it for and so forth. But from a user perspective, the interesting thing is most finance operations team will want 4 eyes principle on their transactions. It will probably be some time before they're willing to hand that completely over to GPT agents and other things. But what we can really support them with, again, on the orchestration side, is even if you have an AI agent that is basically able, and you want that AI agent to sign off on transactions, then that should be possible to do as kind of 2 out of the 4 eyes. And again, this is where the programmability ties in, because making it easy to authenticate those future transactions when the relevant conditions are true is basically where those two things intersect. So I think on the technology side, that's where we see the world going, and also what we're seeking to accelerate to the best of our ability.
Okay. Thanks very much. Maybe we can build a bit on what Panos said before. So you said, well, what I understood was that you were saying we may be dreaming too big because technology is there, but there is no infrastructure to put it on or to lay it on, if my understanding is correct. So the first question would be for you, how would you think to build the bridge? What's the next step? If we dream big, then I think dreaming big is good, because I think that just brings progress. And then maybe the next question for Raluca, because she's coming from a system which is traditional and going for a new code on. So from a perspective of a bank who has to struggle with traditional clients, because now we're talking a lot about digital, and the discussion around this circle of people that is around here makes sense. But if we look into rural areas or into areas who actually love cash, this is a discussion where traditional banks really serve a very good purpose. And I think there is a bridge here between servicing everybody, because banks, the way I see them, they have a role in both, let's say, social responsibility. They service an essential social aspect, but also the fact that they have to pick up the pace and invest a lot. I'm not going to ask who's going to foot the bill, because that's a question that I don't think we can answer today. But maybe from that perspective, if you have a few thoughts of how banks look at it, at least technology-wise, or what they want to implement, and then Panos, for you, how would you build the bridge?
Let's build the bridge together. Yeah, well, I was thinking about what you were asking before, and related to the tradition that a bank has in the market. Well, we are not a one-man show here. We have to provide services for everyone. So the solution for what you were asking previously, and also to help constructing the bridge, I guess we should all think about a balance between us and the third-party provider. As I was mentioning, we are not one-man show in this payments landscape. So if you are looking at, I don't know, from the cost versus control perspective, when you are buying or renting, let's say, a solution from a third-party provider, you might find out that it's cost-effective, right? But at the same time, you get to look from the bank perspective that you will need to have, let's say, some additional control over it. But it comes with great responsibility, and at the same time with lots of involvements from the technical perspective. At the same time, there are lots of plays that can be, we can think about, but I'm guessing that the hybrid approach for this payment landscape, in which we are all together as a strategic partnership with the merchant and for the merchant or for the client, for the bank client, and also with the third-party provider that can help us construct and maintain innovative platforms for the payment landscape. So if you are looking at the bridge that you are trying to construct, well, it sums up what I just said, because we have to work together. We are with the tradition. We are looking at the clients that we have for quite some time, so we think about legacy. So even if the digitalization, even if the payment platforms are growing really high and really fast, not that fast for a bank because it has lots of rules, we also need a provider who might help us with the technical part, with the hardware, with the software, with the know-how, with, who knows, maybe a different market approach. So I guess I've constructed 2 stairs for your bridge. Yeah?
So, unfortunately, we have to build more than one bridges. That's the starting point. I have nothing against dreaming big, but usually what the industry is doing wrong is that we think about something right, something nice, but we believe it can happen tomorrow. Like, okay, we snap our fingers, we're there. This is not so easy. Check all the big changes in the industry, how many years we planned it will take and how many years it took. Second thing is that I don't believe that regulation can drive things forward. Technology and business can drive things forward, and regulation comes as a supplement. So you ask me how we go there, to a full orchestrated payment landscape. You start by putting in place the proper technology at the contact point. What is the contact point? It's the merchant. Because no matter what we design, back office, architecture, whatever, if the merchant is still using a 30-year-old ECR server and 20-year-old POS terminal, there's nothing you can do for him. So we as vendors, what we're doing currently, it's happening, is that we as an industry, we are installing front-end systems, devices and others, which can be a brick in the fully orchestrated payments ecosystem, let's say. The second thing is that you start building your software in a way that allows other people to work with you. For many, many years, payment devices were isolated things that couldn't connect to anything and nobody could touch them, nobody could put software on them. This is changing based on Android, which I said earlier. So today you have an application, you want to bring it on the terminal of a bank, you just give us the API, it's going on the terminal, end of story. These two fundamental things then allow us to integrate the rest of the chain. And sometimes you have to break something and build it better. Let me give you an example. For many, many years, all of us in the industry have been struggling with connecting terminals to cash registers. Big struggle. Then the governments came and say the cash registers have to be connected to the tax authorities and the terminals have to be fully integrated. Another round of struggle. Well, there's an easier way to do that. You get a cash register that has a built-in payment infrastructure and you bypass this problem. So what I'm trying to say, the technological solutions are there. Unfortunately, we have to bring them to the market to replace existing things, existing bricks, and to make it attractive, we have to bring them at the same price level. So your average merchant now has a 10-year-old PCI 3 terminal, and I have to give him an Android POS fully advanced terminal at roughly the same price, so I can get him to get the first brick of what we're going to build down the line. It's going to be a long process. It will start by technology, and technology will drive that. Any process that we expect the regulators to drive it will never go ahead.
I want to take a step backwards for a second. The market you talked about payment orchestration, talks about online processing. But the fact that merchants can now be opening up their market not to work with just one bank at a time, but work with several and add additional payment method to the process. To working with the terminal, that's great to sync up between the offline and the online. But the market itself and the solution for orchestration mainly focuses on online processing for that part. Giving them the solutions in order to simplify the way to have backups when working with one bank, and if that bank isn't available, not to stop the business from operating altogether, but rather having the ability to switch over to another PSP or another bank directly to process with as many banks and providers as possible, to bring, let's say, to even increase the approval ratio, to increase the cost of it, to reduce the cost of a transaction. And that part, that's the whole purpose of payment orchestration on that part. We do all sorts of projects syncing with terminal providers on that part, but it's usually after the fact. The terminal provider, the POS provider will process the transaction, notify the orchestration layer, so the merchant will have one place to see all of his traffic online and offline, and also giving them the ability to manage their cash flows. Part of the services an orchestration layer gives you is to plan ahead on when am I supposed to get paid by that provider or with the other, build the business cash flow, and allowing them to improve the business. So in terms of advancement, any online merchant will have to work with an online provider. Either he builds his own cashier system, working with the likes of Stripes and the other, or taking a step backwards and not putting everything in a black box like Stripe, but saying, I'm willing to work with several providers in parallel. Now, building that payment gateway internally, the logic of when will I send a transaction to provider one or provider two, how will I cascade from the one provider to the other, implementing 3D, as we mentioned earlier, those are complex situations that we don't expect every merchant, smaller or bigger, to have to deal with. And the whole purpose of an orchestration layer is to take that friction away and giving them the tool, and even in most cases introducing him to new providers that will take that transaction with them and allowing him to kind of switch over between which provider he wants to route. If he has traffic from the US, send it to a US provider that's open to EU customers. If he has customers from Brazil, Latin America in general, etc., work with the APM providers in order to facilitate and show the customer additional payment method like Apple Pay, Google Pay, Pix, and every other, let's say, payment method around that.
This is an interesting topic because I'm coming very much from the physical in-store payments world. You're coming too much from the online side. The problem we have, not the problem, the challenge we have is that now most of the big merchants are hybrid. They have physical stores, they have online presence, and the two segments are completely isolated. And considering that the physical payments are still a majority, one important step in the orchestration process is for the merchant to be able to seamlessly manage both. And the biggest problem to that is not technology, is the fact that on an online he would get different KYC rules, different rates and commissions. So I think, talking about bridges, that if we try to give to the merchants a way to manage online and physical acceptance in a similar fashion, that's the big challenge, the starting challenge.
The solution is for me and you to work together. Because to expect the merchant to do integration provider, that will never happen. Like you said earlier, it's super difficult to get him to adapt your solution both for in-store and online. And that's what we did. We started approaching the big providers for retail. I said, listen, I don't want to take your transaction, but I want us to work together and sync between us. And the offering is saying, I provide online processing compatible with the likes of you and the other in the market, so you can sync together the activity.
Great, thank you. I mean, you just wrapped up my idea. I was just turning to you, Ilya, to actually ask, if I were someone to come to you and ask, okay, what list should I take when I look at whom should I choose in terms of payment orchestrations provider, what should I take on the list? I mean, what would be the key items I would look at?
First and foremost is the PCI compliance. Any orchestration layer has to be PCI compliant, and now with level 4 coming in, we're already level 4 certified, but it's going to become mandatory next year. So it's super crucial because these are the people that are going to take care of your business. It's the tokenization. It's the recurring functionality, allowing them to build the subscriptions they need as a business internally, allowing them to take control during the transaction process. Do I need KYC check about the customer? Do I need to take additional identification methods around that? And then in the second transaction, do I ask it again, or do I store that internally to know if it's a repeating customer, not to add additional friction of asking him again to upload the identification? If I'm using 3D Secure in a frictionless manner, or if I'm doing it, let's say, always challenge, as it's called, or if I know how to cascade between provider with a single 3DS validation. Those friction methods are the one that the merchant needs to avoid. He wants to make the payment process as simple as possible for their customer, to avoid soft declines as much as possible. We manage behind the scenes the profile for the customer. So in case he didn't fill the proper billing address, we know how to fill it from previous transaction if he has a profile, if not, to encourage him to add additional information. Those are the things you couldn't expect a merchant to understand and build internally. Those are things coming from millions of transaction processes experience over the years, that you give them that knowledge when he uses your platform. And I think any merchant comes in needs to ask, okay, you know how to process a transaction. That's the base assumption. And any provider you're going to integrate it, what are you giving me extra? What's the value-added service I'm getting from you as an orchestration layer, even if I have to pay a bit extra, but if it means more conversion, better approval ratio, it makes sense that cents turn into dollars or euros, it doesn't matter, and makes that business work much more efficient on that part.
Thank you. Dimona, one question for you. If you look at, because I think the way you presented was that you're looking at the customers, so your main attention is the customer. Looking at the customers, what was the technology you built on so that you can make their experience seamless in terms of what they can do with their own cash?
When we look to our customers and what is the technology that will make them feel comfortable of managing their money the way they want, it was very, very simple. We looked in the first place on the scalability. What is scalability? It's the possibility to process a volume, to go geographically easily further and to go abroad, and to be secure, to be fast, and also to be diverse. So we chose on the first place to provide them the ability to have whatever they want to pay, whenever they want to pay. For example, like on our payment stations, we already reached about 3 million transactions per month. On another hand, on our mobile application, we gave them the possibility to have control on their money, both either on card or via open banking, to have access to their account, to see how much money they have, what is the history of their transaction. So we looked at the technology from the point of view of scalability, of security, and also of the very important thing, the control over the money of the people. Like, this is one of the things that we saw that they're looking at. So that's why we chose these, let's say, criteria, and we went hand in hand also with the payment terminals, with our payment stations and the mobile application. And we see that the adoption rate for the mobile application is quite high. We already have more than 200,000 users, which means that it's a proof case study that it's a need. It's a need of a place where people to meet their cash with their online payments. So this is something that should be taken into consideration, and we are looking further both internationally and internally of scalability, of adding additional features in our mobile application so that to be able people to have access to the services that they want to pay, they want to acquire in a scalable and secure manner.
Super, thank you. Mads, I don't know if he's still online, but I was wondering if he had any consideration on building the bridge between, no?
Hey, can I get the question one more time?
Sorry, I was wondering if you had any consideration on the point of building a bridge between existing platforms and technologies and building in the new technologies, which would require basically to ensure a proper payment orchestration, if we talk about that, or payment or an orchestration of any type of service, because you can apply that to anything actually.
Yeah, no, great question. And I think there's loads of different aspects you can dive into on it. I think so far we've talked a lot about like the merchants and the collection of, basically the collection side of money, where our focus is a lot on the automation of the payout side. So especially when you're looking at online businesses, then we have a lot of platforms that are basically facilitating that consumers can come in, and then it's easy for them to have a marketplace or an e-commerce experience and then do the pay-ins there. But that means you have vendors in the background who has to get paid. So that's a super important aspect. Is basically how do we make it super easy for them to do that split payments, to set up the relevant events for when that vendor has to get paid, and that integration point is crucial towards the customer's backend, where there's basically, in most instances, when you're talking about these online platforms, then they will have built their own backends, and what you have to do is basically get in and seamlessly integrate with that backend that has been set up, such that the vendor payouts can be fully automated. So I think that's one side, especially on the payout side, where there's just the vendor payouts. And then what we are seeing as well that customers care about when we're talking online business is also refunds. And how is it that we can set up those refunds process super easily? Most times when you go and buy something online, then you do the pay-in, you do that via classical infrastructures. Those infrastructures are getting improved all the time. But how can we facilitate a super easy refunds process? Because in a lot of instances, you maybe get 5 pieces of clothes to you and then you send 4 of them back. But the platform that is facilitating that and checking that they actually get 4 back, not 3 and then a stone, that's an event that has to trigger a refunds process as well. And that has to work in the overall business workflow. So overall, in terms of the question asked here, then the direction that we're seeing is, and the question we keep asking ourselves is like, how do we seamlessly integrate to the business workflows of our online customers? And in relation to that, our only focus is online. And the reason for that is the difference between online and transactions and in-store transactions. We believe that difference will kind of go away as it becomes easier and easier to just set up an in-store transaction with an iPad or something like that. So that that difference between those two is basically gonna go away, and that's where we believe that it's gonna be super important to look at the experience of how is it that we do event-based payouts to vendors, how is it that we set up event-based payouts to on refunds.
Great. Thanks very much. So we've got 5 minutes, Alex. Questions included or questions included? All right. So then I would like just one final question before we close, and I think we can manage within the 5 minutes. For you, if you can say one of the biggest hurdles that you see, like the stick in the way, what would that be? In terms of moving forward and getting to a point where we have a seamless orchestration of payments or other services for that matter, but payments because that's what we're on. One of the biggest. I
think the main hurdle for a technology company such as ourselves is the fact that every provider in the market reinvents the wheel in terms of the format they use for the integration. That's the whole point of having orchestration, to save the trouble for the merchant. But instead of all of us sticking to kind of a straight format that will be easier to add any provider in the market, that's what's going to make our lives easier, to make the merchant's life much easier. Because at the end, our main task is to translate format from provider A, make it seamless for the merchant to keep sending in the same format with no adjustments, no additions, nothing. And that's what we face every single day. Every integration, you see they reinvented the wheel with the format, with the notification, with the callbacks. Everything is completely different from one provider to the other.
I wanted to answer to your question, but to be honest, I didn't got the whole question. So I tried to inspire from your answer, but still I didn't got the question.
Sorry.
What's the challenges we face? So everybody with their own challenge.
Okay, so that was the question. Well, interesting, because challenges, when it comes to a bank, when you think at tradition, the challenges is that you have to face these guys here. So every time they are very agile, they are there, they are present, and I see that everyone is discussing about e-commerce, but everyone is forgetting about the fact that everyone loves to go shopping. So yeah, it's one of the big deals here, because we will want to keep tradition, at the same time be so agile so that we can give the customer all the functionalities to make online payments, to have all these features active, but at the same time we want to call the card holders also in the shopping malls. So that's another thing that we have to think about. So those are, let's say, one of the challenges, and one of the biggest that we had, because it's a storytelling here. When we've adopted the SoftPOS solution, that was a challenge. That was a challenge in which we were trying to teach also the card holders, but also the merchant, how safe it is to simply tap and pay using a phone and a card or a wearable. So that was a challenge. So I think the main challenge that everyone has is about education, is about providing all the customers, even if it is a card holder or a merchant, all the necessary instruments that for them to be easy to adapt it. So that will make our lives easier, so no more challenges there. But yeah, I guess, I don't know if it answered your question, but you know, it's a mix of businesses here, so I can tell that you are keen to answer to the question.
I would like you to be very short, please,
Okay,
because we are running out of time.
First of all, we're not going to debate SoftPOS again, okay, because it needs another conference now. Because we talk about orchestration, the biggest challenge for us is that in this industry, the things we are trying to orchestrate is like an orchestra where somebody is changing the instrument every 10 minutes. Let me explain. What we see in the market is that everybody wants to do somebody else's job. So a hardware vendor wants to become a PSP. A fintech wants to become a bank. A technology provider wants to go also into payments. So, I mean, it used to be a time where this was a bank, an acquirer, this here was a service provider, and this guy was a technology vendor. The roles have been mixed, and the roles are changing dynamically. You have times where you try to integrate or orchestrate things, and then the players, the owners of these things are changing. We have major PSPs who are now competing against a company which is also their service provider, because the service provider decided also to become a PSP. So now you have, I don't want to say names, but it's a small market. It's not about Romania, but we have a major PSP with all his systems being run by another company who used to be a service operator and is now a PSP with an acquiring license. So they are competitors, but one of them relies on the other. So this change of hats of everybody in the industry, we saw in Zenico some years ago from a leading hardware vendor wanting to become an acquirer, a payment provider. Verifone is doing the same now, going direct to merchants. If you try to orchestrate something and the people change their roles, it's 10 times more difficult to orchestrate.
And maybe to add at the last seconds, we sit in the middle. We talk with banks, we talk with merchants, but we talk with the end customers. So we saw the challenge of their different needs and the different language that we spoke. So we believe that this challenge has to be transformed into an opportunity. And the opportunity is to communicate, the ability to communicate with all of them. And we believe that we transform this challenge to our capability. Communication between each participant in the chain, in their own language, but in the same time being called together in this.
Thank you. Thank you very much. Guys, a round of applause for our panelists. Thank you. Especially for the moderator. Thank you, Claudia.